Good evening and welcome to our June IHMVCU Financial Fitness webinar. I'm Katie and we're so glad you could join us to learn about Budgeting Basics Money 101. Whether you're new to budgeting or just need a refresher, this session will give you the tools to take charge of your finances and with confidence. Get ready to level up your money game. We'll talk about why budgeting matters, what makes a budget work, how to find your budgeting style, easy ways to improve your plan and grow your savings, and simple budgeting tools that are easy to use. I'd like to introduce our knowledgeable IHMVCU speaker tonight, Christy Rothenberger. She's an assistant branch manager at our Davenport East Kimberly Road location. Christy has been with IH for 2 years and has been in the financial industry for about 13 years. She has held a range of positions from teller, personal banker, and currently an assistant branch manager. She is a certified credit union financial counselor, which has helped her guide many members on their financial journey to achieve financial success. Welcome, Christy. Before we jump in, I wanted to remind you that everyone is muted for the entirety of this session. If questions arise during the session, please place them in the chat and we will address them live at the end of the webinar. Also, this session is being recorded for future viewing purposes. With that said, I'll hand it over to Christy.
Hello, everyone. Thank you, Katie, so much. Are you guys excited to be a budgeting pro? Let's get right into it. So what is a budget? So a budget is a spending plan based on income and expenses. It is an estimate of how much money you will make and spend over a certain period of time. There are many ways you can budget, and we'll go over a few of those today. Sometimes it's best to try a couple different options and choose what works best for you. So a good budget consists of income. So that is money earned or coming in. So examples of that would be earnings on investments, self-employment earnings, pension, public assistance, Social Security, and there are also others. And then expenses are money that is owed or due. So those are the mandatory things that you have to buy. So that would be rent, mortgage, utilities, internet, gas, stuff like that. So why is budgeting important? So by managing your budget, you can achieve financial wellness. It will assist you in identifying if you're living beyond your means, and it can improve your mental health. Budgeting can result in financial freedom and will help you choose the best life. So what is a good budget consist of? It's going to be well planned. So you want to take time to establish your budget. Always know where your money is going. Be aware of expenses that have been paid versus the expenses that have not been paid yet. For best practice, you can use a calendar to notate paydays, due dates, and set alerts on your phone. And we'll go over some resources later on. You want to make sure that your budget is realistic. So when you are starting out, try not to set your goals too high. It is important to make sure your goals are obtainable so you can celebrate your successes. You want to start small and increase as you become more comfortable. Your budget should also be flexible. So reevaluate your budget every month. What went well? What is something that you struggled with? And what changes do you want to make to set yourself up for success? So we're going to go over how to get started. So first, you want to list your income. If you don't know exactly how much you get paid each payday, you want to estimate low. So for example, if your paycheck is usually about $463, you want to estimate your income at like $450 a week if you can. You want to list your expenses. So be specific. We're talking clothes, school supplies, car stickers, things like that. And then you want to list in order of when those payments come out by the day. And if you don't know the exact amount that comes out or the payment fluctuates, you want to estimate high. So For example, if your Mid-American bill is $206, estimate your bill about $210. Then you want to subtract your expenses from your income. And then keep track of your transactions. So there are a couple different ways you can do that. You can use your online banking app, you can use calendar alerts, but we also have some other resources for you as well. And if you can, pay yourself first. So you could set up automatic transfers to your savings account when you get paid. You could also open like a separate savings account to avoid getting like an ATM card or making those funds easy to access for yourself. So we're going to go over a budgeting style called 50-30-20 rule. So what does that look like? So 50% of your income would go to needs. So those are the things that you can't avoid spending, right? So housing, groceries, insurance. The next part of that would be your 30% would be your wants. So that would be like your Amazon cart or dining out or hobbies. And then 20% of that would go to savings. And we will also talk about savings later on in this webinar. So this is just an example of what that would look like. And it lists it below the different categories as well. So how can you improve your budget? So this is a great question. So you could decrease your expenses. So you could call your providers like your phone, maybe your cable or internet and see if they could reduce your price. There's actually a lot of different options that you can do. You just have to ask. I actually did this with my internet and I was able to save a little bit of money. And if they're not willing to help you out, I would say maybe it's a good time to start looking at other businesses to see if they could get you a free quote. But always shop around for free quotes. You could also do direct deposit for your paychecks. So if you don't have a bank account or you get a paper check, you could also see if you could get direct deposit, and then you could avoid having to take your check and paying fees for that. You could use your bank's ATMs if you're a cash person or you're out of town. We also have options where you could get your ATM fees reversed or refunded. So if you have to get cash and you can't use one of your bank's ATMs, you could do that. You could also utilize bill pay through your financial institution instead of having to buy checks. So if you buy a box of checks, it costs money to use your money, really. So you could set up even like automatic withdrawals from your account, or you could use bill pay, whatever is easiest for you. And most companies have options where you could just put in your checking account number and your routing number or even your debit card and have those payments automatically taken out. You always want to shop around before you buy a big ticket item. So you want to shop your rates. If you have coupons, do it. And then avoid shopping for fun. And then you really want to avoid overdraft fees. So I have some fun facts for you. And just to preface, this is just statistics over members who actually overdraft their account. Not everybody overdrafts. So 60% of members who overdraft their account is usually under $50. 50% of members who overdraft carry a negative balance for less than a day until their next deposit comes in. So just think about that. So this is why budgeting is so important. A lot of times just having a little extra cash in your checking account will avoid you from having to pay overdraft fees or even late fees. And the fact of the matter is like when you overdraft your account, it can become like a really dangerous cycle for you, because if you're constantly having to pay those overdraft fees, you might not ever get out of that cycle. So just be mindful of that. So also be aware of like any hidden fees. So that would be like inactivity fees. So if you have an account, you're not really using it, you could get fees off of that. And then like for credit cards, sometimes they have annual fees. So don't be afraid to ask questions before you agree to maybe an account or a credit card. This one's not my most favorite, but you could also bring your lunch to work to avoid eating out. You can meal prep, things like that. You could also carry a small amount of cash to avoid unnecessary spending. I know when I have cash, I just hold on to it because I just don't want to spend it. You could use a grocery list before you go shopping. And I would say don't go to the store hungry either. And then if you can pay your bills on time, you're going to avoid late fees. And then another great tip is consolidating your debt to one payment. So there's a lot of credit cards out there that have like super high interest rates, and we all know about them. And there's people that have multiple cards with really high rates. So we could offer you a credit card with a really lower interest rate, or we could help consolidate that debt. And if you're paying a bunch of different creditors, you could just pay one, and then it could save you money on interest and all of those different payments that come in. So let's talk about paying off debt. So the first method that we have is called the snowball method. And this prioritizes the balances. So first you would pay off the smallest debt first. And then once you pay off that debt, you would use those funds and move on to the next smallest debt. This will help motivate you to pay off your debts faster. And then another method that there is called the avalanche method. So this is going to prioritize your interest rate. So you would pay off the highest interest rate first. Once the highest interest rate is paid off, you would use those funds and pay off the next highest interest rate. And then the goal over that is to pay less in interest over time. So these are both really great methods. But the biggest thing you want to remember is when you're paying these off, you don't want to use them. If they're credit cards, you don't want to add more debt because then you're really not achieving much. Okay, so I have some fun budgeting tools for you guys. And I've actually used all of these in my life. So different periods of my life, but I have definitely used very similar things. So this is a weekly tracker on your budget. So what you would do, this was great for me when I was just getting out of high school. I had a lot less bills then, lucky me. So like if I went to like Monday, I went to Chick-fil-A. Okay, so I'd write Chick-fil-A and how much I spent. And then Tuesday I got gas. Wednesday I was good, I didn't spend any money. And then we go to Thursday, I went to Hot Topic and got some nail polish. So that's a great method. Some people like breaking it out week by week. It's totally up to you, but I am a fan of the week by week. This one is for monthly budgeting. So this one is not as detailed as you can get, and we're going to go over a really detailed one here in a minute. But this literally lists all of your expenses and then your income, your debts, and then how much you've saved each month. But this one's great too. So I am a visual girly and I adore this one. So I like being able to see everything. So it has my date, it has my payments that are coming out, it has when I get paid, all of the things. And this is great. Like if you have a calendar in your kitchen or, somewhere you're every day, you can just look and see, oh, my car payment's due, or oh, I get paid today. So this is also a great method. All right, so Miss Katie is going to drop a budgeting little tool for you guys in the chat. You can also scan this QR code and it will take you there as well, but I will give you guys a couple minutes on that. And then if you guys had questions about the budgeting sheets we just went over, they are on our website and you will receive an email with this information as well. So I'll give you guys a couple seconds here to get that loaded and then we'll go over another example. All right, so if you were to come and see me for a financial checkup, this is what I would use. So this one by far is my favorite because it literally lists everything, right? So this is just an example, by the way. So we have our housing, right? It breaks it down like all the things. Then for food, it talks about groceries. It talks about your eating out. And then there's transportation. And then in this example, this person doesn't do a whole lot. But it also lists like your personal things like clothing, donations, entertainment, vacations, all the things. So we all have different priorities with our budget. So, you know, that's totally fine. So this particular example, it shows what their monthly living expense is. And I'm going to take it over to the next screen here. And this will list your actual income, right? So this is a single person. They don't have any other income coming in. And it also lists what their take home or their bottom line is. So this person has $720 extra out of their budget, where they could put that to savings, or maybe they could find a hobby, or, you know, start something new. But yeah, there's a little wiggle room in this budget. So if you were to come do a financial checkup, like I said, this is something that we would go over together, and I would email it to you so you could have a copy. And then, like we say, your budget should change every month because priorities and things change as well. So you could edit that as well as your life changes. So all right, so we're going to talk about savings. Gasp. According to CNBC, in 2024, an estimated of 50% Americans have less than $500 in their savings account, and 56% of us can't afford a $1,000 emergency without having to tap into credit cards, maybe asking a friend or family for money, or even taking out a personal loan. So I process personal loans daily, and most of the applications I get are typically about $1,000, and it's usually so they can catch up on their bills because they had to use their bill money on an emergency. So instead of being reactive to these emergency expenses, we should be proactive. So we could start a savings plan and be prepared for whatever life throws at us, because listen, there's always something. So how do we get started? So it is recommended that everyone have at least 3 savings accounts, and each of them have their own specific purpose. So emergency savings would be for the unexpected expenses. Then there's the working savings for the upcoming purchases, and then long-term savings for retirement. So emergency expenses. So you want to start small when you're first starting out, because you want to be able to celebrate your successes. So you want to set your goal, we'll say $1,000, by setting up weekly, biweekly, monthly, or automatic transfers to get you there faster. Like I mentioned earlier, sometimes it's best not to have those monies going into your primary account. So you could always have, I would tell you to have like a high interest like savings account or checking account. So at IH, we have the cash booster where you can receive 4% back up to $15,000. So your money is literally, you have it in the bank and you're earning free money on your money. So it's just a great way to save. Some other tips and tricks we see a lot, we have members bringing large amounts of cash and they want to cash it in. So instead of you taking that cash and, I don't know, going to Target and having a shopping spree, you could put some of that money in your savings account. Also, there are cash people out there who, you know, would prefer to have cash, and that's totally fine. There's a fun challenge out there. It's called the $5 bill challenge. So basically, you would choose your time frame. It could be 1 month, it could be 6 months, it could be 1 year, whatever. And during that time frame, every time you come across a $5 bill, you don't spend it. So instead, you would put it in a safe spot that no one knows about. Just make sure you remember where it's at. And at the end of that time frame, you would cash it in to see how much money you've saved. So I've known some members that have done that, and they've been successful. After you reach that $1,000 goal, start thinking about your overall emergency savings. So it's recommended that you save 3 to 6 months of your income for those dire situations. So just an example, a single person, they make $2,500 a month. That person would want at least $7,500 to $15,000 in their emergency account. So I know we don't want to think about it, but what would happen if you lost your job, right? You'd still have your bills that are coming in. You'd have your house payment, you'd have your car payment. And there are so many of us that are still living paycheck to paycheck these days. So it's always good to think about the future, just in case that unknown comes. Working savings. So this type of account is for predictable and unpredictable expenses. So let me give you some examples. So that would be like a roof replacement or car repairs or maybe vacation. So this might sound a little bit like an emergency savings because you really don't know when your car is going to break down. But I think of a working savings of more of the small unexpected things that are going to come up, whereas emergency are for those life-changing things in dire situations. By saving for these expenses beforehand, you're going to reduce your need to borrow. I would say the most common applications that I see are usually for home renovations, car repairs, or vacation. So if you can plan ahead, then you don't have to worry about getting it approved for a loan or adding more to your monthly payment, so changing your budget again. And you can even save hundreds, if not thousands of dollars in interest, and we love that for you. All right, let's talk about long-term savings options. So we're just going to briefly touch on these things. We do have a great resource on another webinar that was done that actually takes a really nice deep dive into these things, but we will talk about them because it would be our third option. My bad, I got excited, you guys. All right, so let's talk saving for retirement. So who can do it, right? That would be anyone with an earned income. So there's no minimum age to start savings, and parents can open up an IRA for their working child. So one option there is a 401k. So a 401k is an employer-sponsored plan which employees can contribute a percentage of their paychecks to every pay period. Most employers will match contribution up to a certain percentage. So example, my monthly income is $3,700. I decide to contribute 7% to my 401k, and my employer will match 5%. So 3,700 times 0.07 is $259. That's my contribution. 3,700 times 0.05 is $185. So that would be from my employer. So at the end of the month, I would have $444 in my 401k. And here's the great thing. So if you decide to leave your employer, you have rollover options. So you could go to your financial institution and open up an IRA, or you could roll that into your new employer's 401k plan. There is also options for pension. So a pension is an employer-sponsored plan, which your employer will contribute money as you work. Once you retire, you earned an accrued money divided into monthly paychecks. So this would be paid to you once you retire until you would pass away. So things that it depends on are your years of service and then your average salary. So example, so 2% is from the employer. You work there for 30 years, so 30 years of service, and salary is $75,000. 0.02 times 30 times your salary is $45,000. And that $45,000 would be divided by 12, and your monthly deposit would be $3,750. And there are also options for IRAs. There's the traditional and the Roth. So when can you start? Start now. As long as you are making earned income, you can begin saving as early as you would like to. When it comes to saving, time is your friend. So how to start? So if you're interested in a 401k plan / pension, I would direct you to ask your HR department. Typically, there's a 90-day waiting period for those. And we would always tell you to contribute the maximum that they will match. You never want to leave free money on the table. And then we have IRAs. So we offer IRA savings accounts. So if you have $250 or more, you could open a IRA CD. And then if you have $7,000 to $10,000 or more, you would be a great person to talk with investments. All right, so that's what I have for you as of right now. So I'm going to pass it back to Katie, and she's going to grab some questions from the chat. So if you have any questions, please drop those in the chat for me.
Awesome. Thank you so much, Christy. I loved the stats you shared, and the budgeting tools were awesome. So I appreciate your knowledge there. We do have a few minutes, like Christy said, to take questions. So if you haven't already, drop those in the chat. While we're waiting a minute for those to come through, wanted to ask Christy where we could also find the spending diary, the budget list, the calendar budget. You had showed some really awesome screenshots of all of those. So where are those resources?
Yeah, so all of those resources are actually, they will be on our website. Where you found this webinar, and they will also be emailed to you as well. So you'll get a copy of this webinar, and like I said, they'll be in there for you for your viewing pleasure. And if you want help making your budget, please come see me. I'd love to help you with that.
For sure. Awesome. Thank you. Okay, I don't see any questions coming through, so we just really appreciate everybody joining tonight. If you have any other questions about budgeting or interested in a free financial checkup or even a consolidation loan like Christy referenced, we have a QR code up on the screen to capture the path to book an appointment with Christy or her team. If you're viewing from your phone, you can copy and paste the short link below the QR code into our web browser, or wait until the follow-up email we send out to book that appointment. The steps to book an appointment are here as well. You simply can choose the service, choose the date and time for the appointment that works best for your schedule. You can fill in the details such as name, email, phone number, and then share if you're a member or not, and click the book button. So please feel free to do that. Be sure to watch for a follow-up email over the next couple of days with the recording of this session and a survey. We would love to hear your honest feedback about how you felt the webinar went tonight. Also, please watch for other free webinar opportunities that will be available monthly for sign up. Our next workshop is on July 17th at 6 p.m. and the topic is fraud awareness and digital safety. So it'll be a really interesting one. The sign up link to get registered will be in the follow-up email as well. Awesome. Well, thanks everyone for joining us, and I hope you have a great night.
Bye. Thank you.
Bye.